Good morning, everybody. Good morning, everybody, and happy Wednesday. Today is November 22nd, 2023. Top story today, WTF happened yesterday. Yesterday was a very eventful day. Well, we had Changpeng Zhou. If you didn't see my video from yesterday, Changpeng Zhou pled guilty to violating anti-money laundering laws. Turns out, oops, sorry, guys, I was cleaning money for ISIS, Al-Qaeda, Hamas. Yeah, my bad. Sorry. And then the former Binance chief strategy officer was on CNBC yesterday saying, hey, at least we didn't steal. At least we're not Sam Bankman-Fried. Well, congratulations for that. Oh, by the way, yes, you did steal. Your whole platform was just a wash trading chop shop for altcoins and shit coins across the world. So Binance is going to pay a $4.3 billion fine. We'll see how they do there. We'll see if they can come up with that money. I don't think they can come up with that money without causing some kind of mayhem. And if you're a Binance customer, probably getting your money out of there, because also as a condition of that deal, the government has pretty much unfettered access to everything going on at Binance for the next 3 years. So if you're an international crime syndicate, are you still going to wash your money through Binance, or are you going to pull your wealth out of there and go somewhere else? So I think Binance is toast. But the bigger story, and I just saw this one this morning, Jeff Bezos is dumping Amazon stock. The Amazon co-founder last week, he sold about $250 million worth of Amazon stock. And apparently he has plans to sell as much as $1 billion more of it over the coming weeks. Now let's keep this in perspective, guys. Jeff Bezos is a billionaire 147 times over. So he's selling about 1% of his stake in Amazon. But 1% of Jeff Bezos' stake in Amazon is about 1,000,000% of anybody else's stake in anything. So that is a huge amount of stock that he's going to be selling. And let's also put this into context. We heard recently Jamie Dimon, CEO of JP Morgan, biggest bank in the U.S., he's selling stock for the first time. The big guys are cashing out. So, I have to ask you perma-bulls out there, you Robinhood bros, you guys who just keep piling in, you just keep buying. And congratulations, you've been right year to date. It's been a magnificent year for the bulls. It's been a shitty year for the bears. But guys, the CEOs are selling. That means your exit liquidity right now. So read the writing on the wall. Amazon's founder selling shares, CEO of the biggest bank in the world selling shares. They're cashing out while you're buying in. That means you're providing the money for them to cash out. You are, by definition, exit liquidity. What else we got? Sam Altman is back at OpenAI. What a circus that's been. I'm sure there's going to be some stupid biopic movie about that coming out in the years ahead where they try to paint him like a hero. I don't think he is. These effective altruism people, the more I read about them, guys, it sounds great. Oh, effective altruism. What a wonderful sounding talking point. Yeah, not so much. It's really just tech billionaires who are suffering from some kind of dark triad personality. I don't know if disorder is the right word, but it's narcissism, Machiavellianism, psychopaths. And they all, like, anything they do is justified because it's all for the greater good, right? Like Sam Bankman-Fried, I'm sure he thought he was justified in stealing from millions of people because he wanted to force everybody around the world to eat cucumbers. And in his twisted worldview, that is a good thing. So I don't think he had any remorse for all the people he stole from. And I think the more we get into him, Changpeng Zhou was another one of these effective altruists. He hires Nas Daily to make him seem like a nice guy. Just not good things happening among the effective altruism people these days. And we got NVDA earnings came out yesterday. Blowout quarter from NVIDIA. $18.1 billion. That was the top line revenue number. Let's see, what else did we get? Earnings per share, $4.02. That's versus $3.39 that was expected. Another blowout quarter for NVIDIA. You know what? Stock market does not care because they guided for $20 billion next quarter. And they mentioned that China was going to take a big chunk out of their sales. They said that sales to China, or what was the wording? Sales to regions that are now under sanction or subject to restrictions, China, were 20 to 25% of their top line. So they're going to take a pretty big hit from this chip embargo against China. Now they're claiming we have this new embargo compliant chip that's coming out made just for China. We'll see how that one sells. Also, I don't exactly trust this company to not try to somehow circumnavigate those. I don't have any proof of that. That's just me speculating. But the real thing was people were not impressed by the guidance. They guided for $20 billion next quarter. Now, $20 billion versus 18.1, that's not very much quarter-over-quarter revenue growth. That is a significant reduction in that revenue growth that we've seen over the last few quarters, which has been admittedly amazing. Now, my personal opinion is it's coming from shady business practices like handing your customers money just so they can hand it back to you and you can report it as revenue. NVIDIA is doing that across the spectrum with their customers. But the numbers that they reported, and this is the thing with these hyper growth companies, is you cannot, the law of large numbers eventually catches up to you. You just can't maintain that growth forever. And even NVIDIA, and even with everything NVIDIA does, it looks like they're at the end of that rope. The 20 billion forecast that they just reported that's coming, the market was not impressed by that. And the stock was actually down a couple of bucks after hours yesterday. It's up a few cents or a few dollars now. We'll see what it does today. But if you're piling into NVIDIA, if you're one of these Robinhood guys and you just piled into NVIDIA options, theta decay is just going to eat you alive. You made the market makers rich because the stock is not making any big moves off of these earnings. And with that, let's shrink my big melon of a head and see what's going on in the markets today. Don't forget that thumbs up, guys. Really helps out with the YouTube algorithm. And if you're new to the channel, hit that subscribe button and have your coffee with the melon heads every morning. The S&P 500 is currently up 17 points, about 0.38% higher ahead of the opening bell, modestly up for the S&P. The Dow is also up a fraction of a percent, about 67 points, 0.2% higher ahead of the open. And the NASDAQ is leading the way higher, up 85 points ahead of the opening bell, or about 0.5% higher. Now, the U.S. dollar, a little bit stronger this morning, 103.8. That's up 23 basis points, but still trading in the range that it's been in for most of this week. And looking in the bond market here, we got yields are down on the long end of the curve, up a little bit in the middle. The 30-year Treasury, 4.538. That's down 4 basis points this morning. The 10-year, 4.393, down 2.5 points. The 2 years at 4.887. That's actually up a tick. And the 1 month is essentially unchanged at 5.39. Taking a look at a longer-term chart on the 10-year yield, guys, this sell-off continues here. We've seen it for about the last 3 weeks. Continues really showing no signs of slowing here. I would add that we're kind of right about this previous high from August right now. So we'll see if we bounce off of that level, or do we do one of these and resume higher, or do we continue lower? Okay, I've put enough squiggles on the page, but the 10-year, and when I say the sell-off, guys, that is the drop in yields. Sell-off is probably the wrong word, because when you see yields moving lower, that is prices moving higher. So this is a surge in the price of 10-year treasuries. So sell-off was the wrong word there, but the yield is falling. Looking over at the commodities board, December gold futures still over 2,000, trading at $2,001.95. That's up about 30 cents this morning. December silver futures at 23.81. That's down about a nickel this morning, 0.25%. Platinum and palladium are both down 1% and 2% respectively. And crude oil, check out WTI, January West Texas Intermediate futures, 74.46. Down $3.31 this morning, 4.25% lower. What's going on in oil here? Well, check a look. First of all, look at this oil chart. Ugly, ugly chart in oil here, guys. Down here, we lost the 50-day moving average. We lost the 200-day moving average. We've now tested it twice, and it looks like we're still headed lower. And then we got this news today. This is pretty interesting here. OPEC Plus meeting delayed as oil production talks hit turbulence. Meetings were scheduled for this week, have been pushed back to November 30th. We were supposed to have an OPEC Plus meeting on the 26th. That's over this weekend. But the Saudis have expressed dissatisfaction with other members' output. Interesting, a little bit of drama going on at OPEC. This could affect oil supply. The OPEC Plus meeting scheduled for this weekend has been delayed as talks ran into trouble amid Saudi dissatisfaction with other members' oil production levels. Ministerial meetings will now take place on November 30th, OPEC said on its website, without giving a reason for the delay. Saudi Arabia, which has been making an additional 1 million barrel a day output cut since July, was in talks with other members about their production levels, delegates said, asking not to be named because the discussions are private. So it looks like the Saudis are trying to get OPEC to agree to another production cut, but they're having trouble making that happen. Brent crude, the international benchmark, fell 3.9% to $79.20 a barrel as of 1:43 p.m. in London. Now, the Organization of Petroleum Exporting Countries and its allies face an increasingly fragile picture for oil prices. Crude is down about 18% from its September peak, defying expectations that production cuts would cause a rapid tightening in markets, the outlook for next year looks even weaker, with potential for a renewed surplus in the first half. Now, guys, I got to say, where is the soft landing talk here? Because why would the outlook for oil look so weak? Why would production cuts from Saudi Arabia and other OPEC countries not cause a rapid tightening in markets? Why? Because demand is falling. That's why, because the whole global economy is slowing. It sure as heck isn't because of electric vehicles and solar panels. What a fiasco is going on in renewable energy and electric vehicles right now. Turns out all that Green New Deal crap was a waste of money. Who'd have thunk it? But right now, oil demand is crashing, not because it's being offset by unicorns and rainbows, but because the economy is shrinking. And the Saudis are saying, we want to cut production. And it looks like that's a tough sell with their other members of OPEC right now. So unless we get a production cut over this next few days, looks like oil will continue heading lower. Again, guys, there's been this shrinking supply versus demand destruction tug of war going on all year. Right now, demand destruction is winning. And let's talk about NVIDIA earnings again here. NVIDIA fails to satisfy lofty investor expectations for the AI boom. Numbers top estimates, but missed some loftier expectations, and NVIDIA announces new chips designed to meet China restrictions. NVIDIA investors gave a cool reaction to its latest quarterly report, which blew past analyst estimates, but failed to satisfy the loftier expectations of shareholders who have bet heavily on an artificial intelligence boom. Revenue in the current period will be about $20 billion, the world's most valuable chip maker said on Tuesday in a statement, though that topped the average Wall Street prediction of $17.9 billion. Some projections had reached as high as $21 billion. After sliding as much as 6.3% in late trading, the shares settled down to decline about 1%. They're currently up a little bit. While NVIDIA posted another quarter of impressive growth, some investors were clearly anticipating more. They've poured money into the stock this year, sending it up 242% on the hopes that the AI industry will continue to bring explosive sales gains for NVIDIA. That means NVIDIA shares were priced at a level that required an absolutely perfect outcome. What is this, guys? We're talking about NVIDIA here, and Bloomberg is actually daring to mention valuation. Do valuations matter again? Because if valuations are suddenly about to start mattering again, stock market's got bigger problems than NVIDIA. This means NVIDIA shares were priced at a level that required an absolutely perfect outcome. Wow. Valuation talk surrounding NVIDIA. I've seen everything now, guys. Pinch me. I feel like I'm sleeping right now. NVIDIA is back in the red ahead of the opening bell. It was up about $2 before when I started the stream. It looks like right now it's down about 34 cents. Again, guys, they just reported $18.1 billion in revenue on expectations of $16.1 billion. They just forecast $20 billion in revenue on expectations of $17.9 billion. The stock is down. The stock is down because everybody bought it. Everybody bought way too much of it. A $1.25 trillion valuation, trading 120 times sales. 120 times earnings. That's forward earnings, by the way. If you don't maintain that growth, this stock has to come back to reality, and it looks like that is happening. And speaking of the ridiculousness of the AI mania, OpenAI says Sam Altman to return as CEO. AI startup to form a new board, including former Treasury Secretary Larry Summers and Brett Taylor, the former CEO of Salesforce. I'm not going to spend too much time on this one, guys, because this is a circus. There was a coup at OpenAI. The board of directors tried to overthrow Sam Altman for whatever reason. There was this open letter was released by some OpenAI employees recently, but at the same time, apparently 700 OpenAI employees threatened to quit if Sam Altman didn't come back. Sam Altman is back now. The coup failed. The board of directors is out with the exception of, I believe, Adam D'Angelo is the one surviving board member. This is a circus. Moving on. Let's talk about Bezos here. Jeff Bezos expected to sell more Amazon shares worth $1 billion, according to CNBC. Amazon founder Jeff Bezos is expected to offload more of his stake in the company on Tuesday after selling shares worth about $240 million last week. Chump change for Jeff Bezos. CNBC has reported this, citing a source, of course. Citing a source. Again, journalistic standards. Nobody ever lists their name anymore. I guess that passes for journalism. Moving on. Bezos may sell as many as 8 million to 10 million shares, amounting to more than $1 billion, the report said. A representative for Bezos did not immediately respond to a Reuters request for comment, and neither did Amazon, whose shares were trading 2.5% lower on Tuesday. So Bezos here sold $250,000. He's going to sell another $1 billion. But remember, guys, this guy's worth somewhere around $147 billion. That's as of a few weeks ago. Who knows what it's worth now? He's not dumping all of his shares, but Jeff Bezos can't dump all of his shares. It would crash the price and his money would go up in smoke. So much like Jamie Dimon, who's selling stock over at JP Morgan, I think Dimon was selling like 12% of his stake. These are very small portions because that's as much as these guys can sell without crashing the price themselves. If they sell any faster, they're going to cause a panic and they won't have any money left to gain from selling anyway. Let's talk about one real quick here, guys. German budget crisis deepens with a freeze on new spending. This one came out yesterday. The finance ministry puts a block on almost all outlays for 2023. Existing liabilities will be honored. No new ones authorized. Look at this, guys. A government cutting spending, or at least freezing new spending. It can be done. What a crazy world we live in today. We've got people talking valuations with NVDA, and we've got governments considering the idea of cutting spending. What is going on in this world today? Bizarro land. But reading on here, Germany imposed an emergency spending freeze in response to last week's ruling by the country's top court, deepening an unprecedented budget crisis that has rocked Europe's biggest economy. Chancellor Olaf Scholz's government has been racing to work out the implications of the Constitutional Court judgment, which called into question hundreds of billions of euros of financing in special funds that are not part of the regular budget. Now, here are, in this chart here, here's the funds that are not part of the regular budget. Here's the total budget, $476 billion. That's their 2023 budget. And then their off-budget spending is apparently bigger than their entire budget. They have got, $212 billion for climate funds, $200 billion in energy subsidies because the climate fund is ruining their power grid. So then they have to bribe people to not revolt and vote them out of office because the power grid is such a mess in Germany. So he's throwing another $200 billion on top of that. And Germany has spent the last few years letting its military atrophy while at the same time lecturing the United States on spending too much money on its military. And so Germany also needs to upgrade their military. They had $100 billion earmarked for that. So it looks like they're putting a freeze on all of this stuff. The bombshell legal ruling casts doubt on Germany's entire financing plans, including projects ranging from subsidies for chip and battery plants to sorely needed investment in the railway network. Senior officials have canceled some public appearances, clearing their calendars to deal with the upheaval. Judges ruled Wednesday that $60 billion in unused debt authorizations earmarked for tackling the pandemic can't be transferred into a fund for initiatives like greening manufacturing and expanding solar power. So they set aside, or they authorized this new debt for the pandemic. Then the pandemic was over and they're like, well, we got this money. We're going to spend it on climate now. It's essentially the same thing. And the court says, can't do that. Now Germany has a budget crisis. And also we got initial jobless claims came in today, guys, lower than last week. Initial claims in the U.S. decreased to 209,000 in the week ending November 18th. That's down from 233,000 in the previous week. So big drop here from that 233 down to 209. We were in this trend all through September and October of increasing initial claims. Big step change down. We'll see next week if that was a one-off or if that's a new trend. And we also got a slight downtick in continuing jobless claims. Continuing claims in the United States decreased to 1.84 million in the week ending November 11th. That's down from 1.862 million in the previous weeks. That snaps an 8-week streak of higher continuing claims. We finally got a slight tick down. Again, no indication of a new trend just yet, but it's worth pointing out because we have been covering that increase in continuing claims in recent weeks. And I just want to say thank you very much to Mr. Easy Fix. What's going on, Easy Fix? He says, I unfortunately was a victim of recent layoffs. I'm sorry to hear that, Easy. I'm sorry that happened to you. But the info you and others on YouTube provide have helped me to be prepared. Keep up the amazing work. Well, thank you so much for saying that and for the super chat and the support of the channel. I really appreciate that. And it's really great to hear that the channel is helping you and has helped you prepare for this. I wish you all the luck in your job hunt. If you get a chance, Easy Fix, just for my own information on the About Me page, you'll find my email address. Shoot me an email. Let me know what industry you were in. I'm curious where the layoffs are happening and what the job prospects are in that industry. I like to get as many snapshots like that. But I wish you all the luck in your job search, sir. I hope you land on your feet. I know that's a hard time. I went through that myself. My wife and I both lost our jobs on the same day back in 2018, but we were lucky enough to both land on our feet out here in Pennsylvania. But that is a scary moment. So I wish you all the best of luck, Easy Fix, and thanks again for supporting the channel. And thank you, Wesley Rubel, who says, can the Fed control the long end of the curve? Indirectly, yes, but not really directly. If they got long bonds during QE, then QT could increase supply of long bonds. If they got long bonds during QE, then QT could increase the supply of long bonds. I'm not sure I follow that. Fed controls the short rate, uses supply and demand for yield curve control. They could use supply and demand for yield curve control, Wesley. I'm afraid that is the direction where we're heading. Right now, with this talk about the Treasury doing buybacks, borrowing money on one location in the curve and then using that money to buy back treasuries on another location in the curve, that is essentially yield curve control, although they're not necessarily printing money to do that. It's a soft form of yield curve control that they're starting to do now. I can definitely see the Fed heading in that direction or getting there. I don't think Jerome Powell will let that happen. And that's why I've been saying for a while now, if they get rid of Powell, you better watch out, because Powell seems to me like he wants to kill the Fed put, like he wants to kill this idea that no matter what happens, no matter how bad the banks screw up, the Fed will always ride to the rescue and therefore a number go up in perpetuity. I think Jerome Powell wants to kill that concept. So if they get rid of Jerome Powell, it means they're about to go back to Zerpenberg. So I agree with that part. The Fed, they directly control the short rate, that overnight rate, but the long end of the curve, they would have to print money, buy and sell treasuries in order to directly influence that. They exert influence over it right now, but they don't outright control it like Japan has been doing, but we very much could get there. Thank you very much, Wesley Rubel. I appreciate the super chat, support of the channel. And thank you, Arthur Powell. Appreciate your super chat, sir. This is great morning show. As a CEO, it's important to have real data on where the economy is headed, which you won't find in the MSM. Well, thank you, sir. I'm humbled to have a CEO following me. I agree. You don't necessarily get real data, or at the very least, in the mainstream media, they'll give you the data point and then they'll give you the spin that the banks and the government want you to have based on that data point. But I agree, the mainstream media, they pick and choose what they want you to hear. They overlook everything else, or they spin it. Case in point, this soft landing narrative. I mean, look no further than what's going on in the transport industry, in the trucking industry. Look at how many truckers are losing their jobs, trucking companies going bankrupt, banks in, what was it, in Idaho, I think, or Iowa, Sac City, Iowa. It was Citizens Bank failed there because of bad loans to trucking companies, right? How are they pushing this soft landing narrative when we see all the retailers reporting earnings showing high single-digit same-store sales negative growth, saying they have no plans to buy any new inventory, that they're going to continue shrinking their inventory. There are no trucks on the road. The manufacturing numbers and the PMIs are all terrible. And you don't get that story in the mainstream financial press. What do you get? You get number go up. You get the Magnificent Seven made a new all-time high today. That's what the stock market is doing and what the economy are doing. Two totally different things right now. Sooner or later, one will control the other, and my guess is it will be the stock market that returns to reality, not the economy that rises to the fantasy world that the stock market is living in. So thank you very much, Arthur Powell. I appreciate the super chat, sir, the support of the channel, and good luck in your chief executive endeavors, sir. And thank you, Madison Hypes, who says, love the show. Well, thank you very much for the super chat and the kind words, Madison. I appreciate that very much. And thank you, everybody else, for tuning in today. I appreciate your time here in the morning. Thank you to my Patreon supporters for everything you guys do for the channel. There is a link down below should you feel so inclined. Looking forward to talking to you guys at 4 p.m. Eastern time for our weekly Zoom get-together. Again, link down below. Hi, Mom. Hi, Dad. I love you guys. Until next time, live small and dream big.